Good evening. Good evening. Welcome to Japan Society. I am Motoa Sakurai, President of Japan Society. I am very pleased to welcome you to the discussion on blockchain tonight, the technology that powers Bitcoin and other digital currencies. The speakers will discuss the value of blockchain for business, the future of blockchain, and the potential impact it will have on society. I'm excited to announce that this event is being livecast globally on YouTube and then on our website. Please visit japansociety.org/live to stay updated on all our upcoming live stream programs in the future. Before we begin, we'd like to thank each of the sponsors that made this program possible. Global leaders, Citi, Deloitte, and United Airlines, and corporate partners, Mizuho Financial Group, and Toyota Motor North America. At this point, I'd like to tell you that we are going to have annual dinner on the June 5th. Annual dinner for society is the largest event. And then if you are interested in, please come. The announcement is available on the reception desk, which you can pick up on your way back home. Now it is my pleasure to introduce today's moderator, Mr. Marc Hochstein. Mr. Hochstein is currently the managing editor at CoinDesk. He is a veteran business journalist with more than 20 years of experience, and more details are available in the pamphlet you have. Now, ladies and gentlemen, please join me in welcoming Mr. Hochstein to the stage.
Thank you very much. Thank you very much, Mr. Sakurai. Thank you to the Japan Society for putting this together. This is going to be an absolutely fascinating evening. This conversation is very timely. And I can assure you that if you've never thought about blockchain or Bitcoin before, if you really dig into it, it's going to change the way that you look at your bank, the way that you look at your money, the way that you look at the world. In a little bit, we are going to have a panel discussion. I'm going to be joined by Paul Vigna from the Wall Street Journal and the author of 2 engrossing books on this topic. Also, Louis Cohen, who I've known for more than 20 years now. A fellow refugee from the traditional financial sector who got the blockchain bug. And last but certainly not least, Yuzo Kano, who is the CEO of bitFlyer. I would say that Japan has now become probably the most important country right now in Bitcoin. And bitFlyer is definitely at the center of the action. Before we have the panel, though, Mr. Kano is going to give a brief presentation. He's going to give everyone an introduction to blockchain technology. He's going to talk about the situation in Japan, and he's going to talk about his company's international expansion. So without further ado, please welcome Yuzo Kano.
Hello, I'm Yuzo Kano, CEO of bitFlyer. Thank you very much for sharing your very precious time. I'm very honored to speak here. I'm going to speak in 20 minutes about our company and our product blockchain and exchange. But first of all, need to mention a little bit about CoinCheck. It's an incident just happened in Japan last week. Unfortunately, they actually got hacked 58 billion yen worth of name. It's one of the virtual currencies. And then CoinCheck announced they're going to actually compensate the part of their the client's assets. Still things are actually going on. We are not really very sure the timing they're going to compensate the loss. But hopefully, actually, the company will make it up And unfortunately, the regulators actually has a lot of concerns about the securities on the cryptocurrencies at this moment. I'm thinking that probably they're going to strengthen the regulations, especially for the securities and the management, I think. So now, it's a good news. I'm going to explain about the bitFlyer. So if you look at the logo, do you know what it is? There's actually 5 blocks and 1 circle. I actually founded the company in 2014. I thought the both blockchain and the virtual currency is going to be very popular. So I actually made a logo by using the PowerPoint. This is so simple. So these 5 blocks describe the blockchain, and the 1 center circle describes the Bitcoin over the virtual currencies. So bitFlyer is very unique. We actually provide the 2 major business services. The one is blockchain and the virtual currency. So usually the startup are actually doing one thing and focusing on one thing because there's actually less resources. But I'm actually trying to do the both at the same time and global expansion. So we got the license in Japan, US, and EU, and we are the only one operator having all the licenses globally. This is our mission. Making the world simpler through blockchain. There are 2 layers, the blockchain layer and the virtual currencies layer. Virtual currencies, such as actually Bitcoin, is one use case of the blockchain. Since the security of the blockchain is very actually firm and you can trust, you can call the number written in the blockchain a Bitcoin or the currency. In 2010 or 2009, people didn't trust that because it's just a number on the blockchain. But maybe actually from the 2013, people actually trusted, oh my gosh, is this a money? And the value just generated, and the people trading higher and higher the Bitcoin. This is actually how the value on the Bitcoin was generated a couple of years ago. But actually, it's a digital data, so you cannot see, you cannot touch, but it's just a number written on the blockchain. We do both actually blockchain and virtual currencies, but as a broad and wide of the actually category, we think both are belonging to the blockchain. Komiyama-san is my co-founder. Both actually, Komiyama and myself used to work for Goldman Sachs. I joined Goldman Sachs as an engineer and become a trader after that. So I studied a little bit about the both finance and the technology. This is fintech. Komiyama-san is a CDO, used to work for Goldman and the Konami and the Sony. He's an engineer. It's, if you look at the top, below the title, in the corner of the bread shop in Tokyo, we didn't have an office at the beginning. Now we have actually 130 employees globally, but I started in the bakery, and it's growing little by little. It's a very typical startup, but it's rapidly actually growing. This is our value. Usually it's called like an MVV model. So you state mission, vision, and value. Our value is pen, passion, execution, numbers. We don't have anything. At the beginning, no money, no people, no employees, no trust, no clients, no revenue. But we only have passion to make it. So passion is the source of energy, and it actually drives the business a lot. It's really difficult to actually like the beat or let's say make the new actually product, because our competitor is not just the startups, but the big banks. So we need the passion to drive the business very quickly. And execution is very important. A lot of people actually think this is easy to make. Okay, I got an idea. I can make it work. But it's really difficult to make it. It's easy to say, but difficult to make. So we value the execution to make it down. Numbers is very important for us. Since I'm a sort of actually scientist, I usually think anything very quantitatively. So rather than actually, okay, this is good, or this is bad, I would say how good, how bad, and why. Because without actually numbers, it's kind of difficult to compare which is good or which is better and the best. So usually in marketing, hiring, product, anything should be actually quantitative. I'm going to explain both actually services in the blockchain and exchange. So now this is a blockchain. We made a proprietary blockchain named Miyabi. This is a very Japanese name. The reason why I gave the Japanese name is just because we want to actually start with very Japanese culture and going global, like US and Europe. We got the patent. It's a global patent about the private blockchain. There are actually two major categories in the blockchains: public blockchain and the private blockchain. Bitcoin, Ethereum, those are actually considered as public blockchain, so anybody can join as a node or the users to actually transact the, let's say, virtual currency, send the virtual currency on the blockchain, or execute a smart contract. Anybody can join. This is actually called a public blockchain. Miyabi is considered as private blockchain. Only the limited users can join. With that, we got the finality. This is very actually important function as a blockchain, that finality is you can determine the data immediately. Unfortunately, the public blockchain like Bitcoin, you have to wait at least for 1 hour. Because based on the consensus algorithm named the proof of work, it's really difficult to tell the data is fixed or not in a second. That's actually a disadvantage of the public blockchain. This is a little bit complicated, but we categorize blockchain as a database, a part of database, because you can write and you can read. So we think the blockchain is a part of the database having several unique functions. If you look at the top, it's wrong spell. It's RDBMS, Relational Database Management System. This is a very common database like Oracle, MySQL, or Microsoft SQL servers. There are actually several types of database. I think the more than 90% of the database belongs to RDBMS. If you add the distributed, so you have the several nodes. This is considered actually several distributed database, like Apache Cassandra. And you add immutability. Immutability is a function. You cannot delete the data at all, like Bitcoin. You cannot overwrite. You cannot update. So that's the reason why people actually trust the data inside of the blockchain. It's immutable. BFT is very unique function that there are several nodes, and some of the nodes actually goes down. Still, you can reach out to the right data because nodes are talking each other and decide which data is correct or not. So this is a function that, although there are actually several computers / nodes went down, you can come up with the right data, and the whole ecosystem actually continue running. Single point of failure is if the one actually nodes go down, if the whole system goes down, this is not good because the whole system actually belonging to one node, then this is not a blockchain, I think. So try to avoid the single point of failure. Otherwise, I mean, it doesn't have the availability. System actually could go down easily. And the finality, as I explained, we need actually finality to fix the data in few seconds. Otherwise, no financial institutions wants to actually use the blockchain as a database to write down any transactions, not only the virtual currencies transactions, but the stock movement, buy, sell, money wire, or trade finance. MIAB is the very fast blockchain. The problem of the Bitcoin's blockchain is very slow. It only transacted 7 transactions per second. It's very slow. That's the reason why the fee on the Bitcoin had been increasing. A few years ago, we only paid 3 cents to transact international payment through the Bitcoin's blockchain, but it hit actually $30. I don't want to pay actually $30 because banking is cheaper. This is not new technology if you pay the $30 per transaction. I don't want to send, let's say, $2 to my friends by paying the extra $30. So this is actually the biggest problem with the Bitcoin's blockchain. The capacity of the block is too small. It's set to 1 megabyte. MIAB actually transacts 2,000 to 4,000 transactions per second. I think this is good enough to transact the most of our financial use cases. But still, this is much more slower than the usual database. Usually, Oracle can transact more than 100,000 transactions per second. So blockchain has a lot of actually good functions, immutability, BFT, so it's secured, and huge availability. But it's very slow because the nodes are actually located remotely and they're talking each other to come up with the right answer all the time. We got nominated as partner vendors by Japanese Bankers Association. Japanese banking infrastructure is managed by the JBA. This is another JBA, by the way. They actually built the system called like a Zengin net, and then the banks actually joining that network. And if you initiate a transaction of the fiat currency, it goes through the JBA Zengin net. We are very honored to get nominated, as well as Fujitsu, Hitachi, and NTT Data. They are actually gigantic system integrators, and we are the startups got nominated. Moving to the exchange, we are actually first virtual currencies exchanges got all the licenses among the 3 continents, US, Japan, and Luxembourg. You can actually operate to the old EUs by getting the license in Luxembourg. The trade volume is a highlight. In 2017, it's got a lot of increase in the trading volume. And before actually 2016, I mean, nobody actually cares about the cryptos, but we actually think this is the first official year of the start date of the virtual currencies. We are actually ranked #1 in the world. This is including the leverage trading in the cryptos. We provided 15 times leverage to the Bitcoin. And then usually the people compare the exchange service by the volume because more liquidity is easy to trade for the users. We can actually provide a cross-border trading, meaning that the US guys can trade to the Japanese guys in the same board order book. That actually brings the more liquidity from Japan to US or vice versa, or maybe to the Europe. So my opinion here is, in the crypto, comparing the traditional financial market, it's much, much smaller. It's very thin, very small liquidity. So increasing the liquidity / actually trading volumes is very important for all the people. The reason why it's volatile is because there's actually less liquidity than the traditional market. So more users coming in, and more actually reports reports actually issued, then I think the volatility will be settled down. I mean, world's most regulated virtual currencies exchange, as we got 3 licenses. We are very patient. Although there's a lot of actually operators without a license, we didn't operate at all because compliance is very important, we think. We got a license in Japan by FSA, Financial Services Agencies. We got the 42 states license, including the bit license in New York, which is very difficult to get here. The last month, or this month, got a license by CSSF, it's in Europe, regulatory. So compliance is a competitive advantage for us. We don't have any period of time running the business illegally. So what's happening in China? Seems like they're trying to ban the cryptos. That's the reason why all the major exchanges are coming to Japan recently. That's unfortunate. South Korea, initially there was actually the news that the government actually banned the virtual currencies, but they switched their mind. There are actually some pressures by the users that shouldn't. So, road to regulation is Japan. Japan is the first actually country issued the specific law for the virtual currencies. That is actually called the Virtual Currencies Act. It's enacted in April. There are actually 16 exchanges got the license so far. We are one of them. Unfortunately, CoinCheck doesn't have the license yet. Maybe that's the reason why they are not fully aware of the security or the management. Regulation plus protection equals certainty. It's really important to protect the consumers first. So Japanese Virtual Currencies Act forces us to distinguish the client's assets and the firm's assets all the time. So we need to rebalance the assets, not only just cryptos, but the fiat currencies to the dedicated accounts. This is really important. Okay, this is actually all the slides. I'd like to highlight that again, we actually do both have the blockchain and the cryptos, and I still believe that talking to the regulators and setting up the right regulation is the key to save this ecosystem. Otherwise, it goes underground, or maybe actually regulators sets inappropriate actually rules, meaning usually it doesn't fit to the crypto world. It doesn't have that concept, or maybe actually try to apply the usual traditional financial law, which is too strict. So I'm still talking to the regulators to what is actually right regulations, not only just virtual currencies, but maybe the ICOs. So hopefully, currently the situations in the virtual currency is not that great. People are kind of very pessimistic, but hopefully people can recover the trust, and then the fingers crossing for the new futures. This is the end of my presentation. Thank you for listening. Thank you. Thank you. Oh.
All right, thank you. That was a great way to level set the conversation. We're going to start our panel discussion?
I'll sit over here.
So I want to pick up the conversation actually right where you left off with the presentation when we're talking about regulation. Yuzo, you're now in 3 continents. So you've dealt with a lot of different regulators across the globe. Can you talk about the differences that you see in the attitudes from the regulators in the different countries, in the different states here in the US, what kind of questions they ask, like what their disposition seems to be to this technology?
Sure. Basically, all the regulators are concerned about AML and CFT.
And for those who are unfamiliar, that stands for anti-money laundering and counter financial
Know your
terrorism.
customer.
Yes, and yeah, know your customer.
Yeah, so basic rule is the same. So you have to know your clients by, approving their IDs, photo IDs. Japan is kind of advanced because we have the specific actually law for the virtual currencies. So Japan has the, as I said, the segregation of their firms' assets and the customers' assets. That's required. US is a little bit complicated. We are actually required to get the MSB and the MTL, money transmitter, and the bit license in the New York. Some actually states doesn't require any license. So it's a little bit like not actually have the same rule amongst the states, but mainly actually focusing on AMLs. So we need to actually put some money for the collateral to the regulators to protect their consumers. And some states actually require their capital reserve. Europe, mainly actually it's the same, but their concern is more like receiving the Bitcoin. So we need to track the movement of the virtual currencies on the blockchain. If there's actually suspicious activity from their suspicious account, we need to stop. They usually are not really fully aware of the technology, so it took 2 years to explain to them what the new technology is.
Interesting. Louis, what's your perspective on the global regulatory attitude towards this whole sector?
It's developing, Marc. Regulators are still trying to figure out what the right way to look at these products is, and there's no single product here. Virtual currencies have a certain set of issues. Token sales, sometimes known as initial coin offerings, have another set of issues. There are a whole range of ways that blockchain technology can be applied with different jurisdictions and different issues. So right now, regulators are doing a lot of discovery, and in many cases, they are regulating by enforcement. So rather than, in Japan, promulgating new laws which are proactive, in the United States, we see a lot of regulation through enforcement actions. The problem with that is it doesn't give the best guidance to the market because we know what not to do, but it's hard to know where the perimeter is. What is it that we can do? And that presents a challenging environment for people to innovate.
And it's sort of ironic that regulation is such a big part of the whole conversation now. I mean, Paul, you've been covering Bitcoin from the early days, and the early adopters, they were not big fans of regulation. Is that fair to say?
To say the least, they are not big fans of regulation. I think a lot of them thought they were simply going to evade regulations forever, and that they had created some new world that was, external from any government influence. And that really lasted about 6 months to a year. I think pretty quickly people started to realize, and it was really as soon as you started to see this touching the mainstream a little bit, as soon as they started to get outside of that sort of cypherpunk circle and the anarchist libertarian circles, and they started touching average people, they realized you're not going to be able to have a technology that has an effect in the quote-unquote real world and not have to deal with the regulators and the governments of those real worlds. And I think you can see that in what Yuzo has done. I mean, like, frankly, you guys could have done some offshore thing and avoided regulations and had nothing to do with anybody and probably made some good money at it. But you didn't want to go that route. I mean, you went a completely different route. And I think you saw a lot of people make that decision. Do we want to be the pirate radio of the finance world, or do we want to actually deal with people and deal with regulators and be proactive and try to create something that we can have this technology and this product that we all believe in? You talked about the passion, and have that be something that touches people in a normal way. And I think that's where you saw that shift over the course of a couple of years, but I think that has pretty much taken hold now.
Now, when you talk about the average person, the consumer on the street using cryptocurrency, you have to go back to sort of the basic question, why? And maybe Yuzo, you could start there's this term in Japan, Mrs. Watanabe. Why are consumers in Japan, other countries, using it? Are they really using it to buy things? Are they doing it for speculation? Is it just a way to get rich quick? Is this day trading? Is this gambling? Like what is the use? What is the real use case?
Yeah, the actually main use case is speculations. They actually buy the coins and they're selling in a second. So it's a day trading, or usually they buy the other minor cryptos through the Bitcoin. So they buy the Bitcoin here and wire to the exchanges outside of Japan and buy the very cheap coins. And then, expecting that's going to be like 10 times or 100 times. That's actually main usage. We also provide the payments. We actually made an alliance with a very big retail shop, Big Camera, or Yamada Denki. They are selling the computer stuff and wines, alcohol, or electricity stuff, anything. So people can use the Bitcoin to buy the things.
Do they?
Yes.
How much in significant volume?
Yeah, it's increasing. It's increasing, but comparing to the speculation, it's a part of the activity.
Maybe to pick up on that and perhaps connect the dots a little bit, I had a presentation earlier today here in New York, and someone asked a sort of pointed question. He said, well, I just don't see the point of Bitcoin. We can make payments very easily. And he was just confounded by the whole thing. And I said, well, where do you live? Well, here in the US. I said, well, that's right. And it's a point, Paul, you bring out in your book very well. There isn't a great use case right now in Western countries for payments with Bitcoins. We have very good payment systems. They're cheap and they're efficient, as you mentioned in your remarks. But in many other places, in Afghanistan, where you started your book out, we don't have that. And so by purchasing Bitcoin here in the US, what you're effectively doing is taking a view on the adoption of this incredible technology in many places around the world where it is needed. And I think that's a very valid use case. You're not using it necessarily as a store of value here in the US. You're taking an affirmative economic view that over time in countries like Afghanistan and Nigeria, in Argentina and Venezuela, there'll be demand for this. And I think that's, for me, a very valid way of looking at it.
Well, that's speculation as well. But
it is, absolutely. But it's speculation with a thesis,
yes,
which is that the idea of a decentralized cryptocurrency will be of increasing interest. You want to pick up on that, maybe?
Yeah, I think even the irony of this entire discussion and debate about what good is Bitcoin for is that 4 or 5 years ago, that was a real question. Why should I use Bitcoin at all? Today, they ask that question, and then they go ahead and pull out their mobile app from Chase or whatever their bank is, and they pay for something, or they use Apple Pay or Google Pay. The idea of digital mobile money in the last 5 years has become really pretty commonplace. And even here in the US, and I am actually, despite the fact that I write about Bitcoin, I am the biggest Luddite on the planet. I have cash in my wallet right now, and I will use it before I will ever drag out a credit card. But the idea of mobile money, I think, is really becoming something that people are very familiar with and used to now. And Bitcoin fits right into that, but Bitcoin kind of, I really almost think that Bitcoin missed the boat on what it could have been 4 years ago if they didn't get into, and this is a whole rabbit hole, folks, we don't need to go down into it, but you guys know what I'm talking about, the scaling debate. I think Bitcoin took a really kind of a big left turn on that, and at a time when they could have been a leading technology, mobile money, and could have really done something cutting edge on that, I think they've fallen behind on that. I think the world has caught up to Bitcoin, actually. And I think it's interesting, in Japan, you now have rules put in around Bitcoin. And when those rules went in, I thought, this is it. Japan is going to be the really big sort of test case for Bitcoin to see if it can work on a daily basis. And I think you alluded to it in your presentation. The way that the fee structure has now evolved makes it very hard to use Bitcoin for any kind of normal purchases. I think Bitcoin has sort of hamstrung itself in that case. I think there is a great case for mobile money, and I think Bitcoin really could have been leading that development, and I think they've kind of fallen apart on that a little bit.
But is that really all that Bitcoin's about? Is just that front end? I mean, I actually do think it is worth briefly touching on the scale. But by the way, when we talk about the scaling debate, how many people here know what Paul is referring to? It's okay to, okay. All right, Paul, in 20 seconds, explain the scaling debate.
Oh my God. Okay, so Bitcoin is set up to be this self-operating program. It has a lot of different levers to make that work. One of them ends up being this fee that people can put into, you gave me 20 seconds, Mark, geez. The problem is that Bitcoin is not scaled. It has not grown up. There are only so many payments that can go through the network per second, and people are offering higher and higher fees to move their payment to the top of the front of the line. Fees are going up because the network hasn't been changed, and I'm not doing it well because you gave me 20 seconds. The problem is, though, that fees have become very expensive. 5 years ago, fees were negligible. They didn't even exist, really. And now it can cost $30 to make a single Bitcoin transaction, which makes it very impractical if you're trying to use it for anything small.
Actually, it came off recently to 10 cents, so it's a good news.
So it came down.
It was actually cheap, and then hiked up to the $30, and then back to 10 cents. I think this is just because there's a lot of people trigger the witness segregate.
Segregated witness.
Yeah.
And don't worry, we won't have to explain segregated witness because that's a whole technical issue. But I think the thing about the scaling debate, though, and actually this is where I would push back a little bit against that observation earlier, is that it was all about what is Bitcoin really about. And and please tell me if I'm mischaracterizing it, but you had these two camps, and one camp was saying, within the Bitcoin community, was saying, we need to scale fast. That we need to make this now, today, a viable competitor to PayPal. And you had this other camp, which was probably more ideological, but very much invested in the project of Bitcoin, saying we have to proceed extremely slowly, extremely conservatively. We cannot do anything that can jeopardize the security of the network, and we cannot do anything that can jeopardize or further centralize the network. And so you had this one group that was saying, like Paul just said, let's be mobile money right now, and let's scale right now, sooner rather than later. And you had this other group that was just sort of saying we have to be gradual about it, and we have to protect what makes Bitcoin special. Is that a fair summation of the debate? Yeah.
I think it's a fair summation, but I think it's also important to understand that inherent in the idea of Bitcoin is the idea that operates purely, it's capitalism in its purest state. Everyone is motivated by their economic interest. The people who validate transactions of the network, miners, do so for pecuniary gain. This makes a complex dynamic because there are multiple motivations, and we see that in the scaling debate of different agendas. So some businesses liked the idea of a network that was, had these smaller block sizes, fewer transactions, and might allow them to build other things on top of that, which they could, be compensated for. So there's no rule set, and people are approaching the whole project very much from whatever is in their economic interest. I think that's very valid, but it's also important to understand there are many different agendas going on and many different layers in understanding what's going on.
Yeah, and I think not to get too far off track, because you made an interesting point. I mean, Bitcoin is a technology that has a lot of different applications, and exchanging value is one of them, and I think it's a very good one, but it's not the only one. And the larger issue to keep in mind is that idea that what we have now, what you're putting in place and what people are experimenting with, is really a very new way of, and this is going to sound, it's really funny because this is actually very boring. It's an accounting ledger. It's a new way of, it's a new accounting book is really all it is when you come down to it. It sounds very mysterious and there's a lot of shady character around Bitcoin and we think it's very esoteric, but when you really come down to it, it's just a program that allows you to record transactions in a ledger, which sounds very boring. But actually the applications for it are, there are so many applications, there are so many things you can do with that, it becomes really fascinating to explore all of that. And you know, again, the scaling debate's interesting, but I don't want to get too far, you know. I don't want to waste all our time on just that. No, and I started it, so I feel bad.
Yeah, no, fair enough, fair enough. So maybe we can talk about some of those other use cases. I mean, you know, Louis, like, why are businesses, enterprises interested in this blockchain stuff? Like, what you know, what good does it do them to have? You know, they have ledgers, they've had accounting forever. What does this distributed ledger do for them? How does it add any value?
Let's ask a businessman.
Sure. First of all, actually, as I actually explained in the presentation, that it's very secure. Secure, and usually it's available, meaning the system never goes down. For example, like Bitcoin's blockchain was running, has been actually running for the last actually 9 years without any fail. The actually nodes got a lot of actually DDoS attack, maybe every single day, but still keep on running. This is high availability, super high availability, and it's secured. The data stored in the block never be rewritten because all the data is actually have the relationship to the previous block. So if you actually rewrite, if the hacker actually rewrite the data, you can detect so easily, and then you can ignore that node and then pick the data from other nodes. So I think the security and the immutability, those are the keywords they want to actually use a blockchain.
You know, I mean, Bitcoin was created for people transacting on the internet who don't trust each other. Mm-hmm. It is a zero trust environment. Yeah. Do corporations not trust each other to the degree that they need a solution like this?
Well, there are actually different layers, actually. The trusting the corporate is not actually technology. We're talking about technology layer. Mm-hmm. So although actually maybe the Bank of Japan has a system, it could actually get hacked, right? So I can trust the Bank of Japan because they have a lot of trust. So the credibility on the company itself and the credibility of the system is different.
Mm-hmm. That's a good point.
I would also add, businesses look at this technology for some other reasons. One is simply cost savings. So in the financial sector, Marc, you know very well, we see multiple ledgers, and you made the point, Paul, that there's just basically a ledger at the end of the day, multiple ledgers all keeping track of the same thing and needing to be constantly reconciled to each other. There's a tremendous amount of work, effort, and cost that results in that. There are also capital considerations to make. Where you have centralized parties, there may be a need to hold capital in multiple places to cover centralized risks, for example, with swaps and derivatives, that are not actually necessary if everyone can keep a constant unified ledger record and trade in real time. There's no need to hold capital for settlement risk. This is in and of itself a huge potential use case. So saving cost is a starting point. But as I like to say to folks, the passion that you see around Bitcoin isn't really, or blockchain generally, about saving money. There are new businesses that are springing up all over the place that are decentralized, looking at existing businesses. So right now I talk to clients, almost any major business you can think of, somebody's got, well, I've got a decentralized version of Uber. I have a decentralized version of Airbnb, a decentralized version of Amazon.
And why is decentralized important?
It's important for a number of reasons. Because there's no central common control point. One, it has many of the benefits that we mentioned here, but also because costs can be much lower When you have a centralized party, they need to make an equity return. When you think about large businesses like an Amazon, their equity market capitalization is enormous. If you could provide the same services without that central capital, that could be much, much cheaper, and people are always looking to attack incumbents. So there are a lot of use cases around that, attacking incumbent businesses. In the area of insurance as well, people are looking at providing insurance without nearly the cost base, peer-to-peer insurance, for example. Fascinating area you can do with blockchain.
If you have a decentralized Uber, say, and there's no central authority, there's no Travis Kalanick calling the shots, it's just this completely distributed network, and then an Uber car hits someone on the street, who do you sue?
Well, how you resolve that depends on how the system is set up. But right now, I don't know that you're suing Uber in any event. The reality is that there are things called decentralized autonomous organizations, ways of setting up groups of businesses or people that don't have a central point. Who you sue and how you sue them will be determined by other factors. And you may not need to sue anyone because things resolve themselves in their own system. It gets very complicated, but I would certainly say as a lawyer, people are not slowing down because they're worrying about, in a decentralized Uber, for example, who do you sue?
Paul, now that you've written, 2 books on this topic, The Age of Cryptocurrency and now The Truth Machine, how do you view this technology over time changing society? 10 years from now, if this blockchain thing really takes off, as like everyone says, how are our lives going to change?
Thank you for asking me the broadest, biggest question you could possibly think of.
It was only fair after the scaling debate, right?
Yeah. Right. I think the potential is very large, and that's really why I write about it. I think this is a very interesting technology. My interest in this is to tell a good story, to tell an interesting story that I think is going to have an impact on our lives. I'm not an investor. So I write about this because I think the answer to your question is that the potential is great. I would say 2 things. One, keep in mind, I think a lot of people always talk about, they try to compare Bitcoin and blockchain to the internet. And they say, well, it's like 1994. We're at the point of Mosaic, or it's 1995, or not. I think we might actually be in the 80s or the 70s. I think this is very, very early days for this technology. I mean, the internet itself went live in a lab in, I think it was 1969. And it was there in the 70s, and nobody knew about it, but scientists were working on it, and they built the technology, and they spent a long time building the technology. The difference is that Bitcoin went viral, and now everybody knows about it. But in terms of its development, I think we are still at a very, very early point. The potential, you talk about the potential. Think about this. And when we're discussing a ledger, right? We're talking about an accounting book. What does this accounting book allow you to do? Because the program we're talking about distributes that accounting book across a number of linked computers, no one computer of which is the central point. They are all carrying an exact copy of the same ledger. What it allows for is an incredible amount of transparency and clarity into the individual entries in that ledger. And I think a great example of abuse of a ledger in the systems we have now is Lehman Brothers in 2008. And at the end of 2007, Lehman Brothers had a record year. And Lehman Brothers had their best revenue ever and their greatest profit ever. They had a $4 billion profit, or they had $4 billion in revenue and a $1 billion profit. They had a really great year in 2007. Everything was great. 9 months later, Lehman Brothers was out of business. How could Lehman Brothers be out of business? We all saw the books. The books looked great. Well, the answer was Lehman was not truthfully keeping the books. Lehman was abusing the books. But we didn't know that because we couldn't see into that. This technology would allow you to see into that. Now, obviously, you're a lawyer too, you know, there are so many thickets in that. I mean, no bank wants everybody looking in at their book. There is a lot that needs to be sussed out here. But essentially, the potential of this is that you could have an online system that is not controlled by any one party, thus is much less rife to being abused, that allows a tremendous amount of transparency and, like you talked about, immediacy and lower costs and all those great things, but the idea that you could have a system that cannot be abused in the way that that we have abused systems in the past, I think that is the greatest potential. And the ramifications of that could be very, very large on a societal level.
You know, that transparency can be a double-edged sword, though. You know, particularly when you're talking about public blockchains, when everyone can see what's going on. Yuzo, maybe you could talk about the two sides of that, what that means in terms of AML compliance and helping, you know, law enforcement track these transactions, but also, like, you know, how do your customers feel about the privacy questions that raises?
Well, it's not really actually linked to your account. So you can, I mean, the CoinCheck incident is a very good example that you can track where the actually coin goes, and you can detect the wallet, but you don't know who that is. So I think the privacy itself is protected. So if the actually police wants to arrest somebody, usually you come to the exchange, and then you actually find the link between the account and the blockchain. This is how actually the police actually arrest the people. So if you look at only the blockchain, again, it's impossible to actually detect who's using and who's moving the coins. So,
but I mean, there are whole businesses that there's like a cottage industry now of companies that analyze the blockchain. Mm-hmm. You know, they work for law enforcement, they work for the banks. You know, they're tracing things all day long. And you know, there are some users who have publicly advertised, this is my Bitcoin address. This you know, zap me some Bitcoin. Yeah. You know, that seems like that's a privacy leak.
Yeah, but that's intentional. Actually, you're leaking your information. Don't do that.
Well, right. Yeah. And I know that there are some really interesting solutions in the works to kind of give us the best of both worlds there. I mean, you talked about passion earlier. You know, what is the passion that drives you in terms of, like, because it can't just be to help people speculate. I mean, what do you think is sort of the end game here?
Sorry, I didn't understand your question.
So what drives your, like, when you talk about passion, like what kind of a future do you want to build? What do you want this to lead to?
Well, I want to actually make the world simpler by blockchain. That's our mission. So I think the blockchain actually provides a lot of actually better services than the current financial systems, or not just actually financial systems, but any actually government system, etc. I'm a member of the ISO, International Organization of the Standardization, talking about the terminology of the blockchain and the DLTs. My personal opinion here is I want to actually talk about the interoperability. That is actually function to connect each blockchain talking each other. Even like the Miyabi can talk to the different blockchains, such as like Hyperledger. So for example, Miyabi has a system for example, account system in Japan, and then the Hyperledger might have the another actually the individual data management, and so we can do the AML very easily by accessing to the other databases run in the different regions. Or maybe I can use the one blockchain to transact the stocks from Japan to US. That's actually covered by the different regulators, but I think it's possible. For example, like sending the actually money from Japan to US, it costs how much? It's minimum like $50, and then plus actually extra spread for the forex. That's too expensive, and the system actually remains the same for the last actually 30 years, provided by the SWIFT. It's old protocol, old system, but
1970s.
Yeah, but why still using the SWIFT? It's just actually transacting the data from one to B, from here to there.
Yeah.
One thing, Marc, I want to touch on, because we're spending a lot of time here talking about Bitcoin itself or other virtual currencies, and that's a huge part of the story. But the blockchain technology can do a lot of other interesting things. And I'm curious, just again, by a quick show of hands, how many people have heard of Ethereum? Is that something right? So this was a huge step forward, of course, in that it said, well, if you have a blockchain that keeps track of numbers, as Yuzo, you were very clear, you can keep track of numbers, can be anything, it can be computer code. And of course, with Ethereum, you have a blockchain that actually can track and operate computer code in a virtual machine. And to my mind, that's some of the most interesting applications of this technology are where you start to allow code, which we call smart contracts, to operate in this blockchain environment. One of the things I'm particularly fascinated about is people have heard of CryptoKitties? Let me tell you, this
Did you buy one? You can tell us.
My one tweet I was proud of, I call it CryptoKitties the starting gun of the blockchain age, and I stand by that. Because what is a CryptoKitty? On the face of it, it's a little novelty, a cartoon cat that actually, if you have, could breed with other little cartoon cats and create more of them, which in theory you could sell if they're rare and unusual. But really, what a CryptoKitty is a bit of smart contract code. It's a digital asset. It's a natively digital asset. And what these guys demonstrated is there's a real-world market. People who, maybe even me, will part with their real-world money to buy a digital asset. And once you start thinking about what that looks like and what these digital assets can do in a marketplace, for example, the opportunities are unfathomably large. So I don't know if you've covered that, I'm sure, in your column, but I think I would pay close attention to it. It's very different from a cryptocurrency. Each asset is unique, and each lives on the blockchain. So very different.
They're digital beanie babies?
They're digital beanie babies, yes. But again, if you get distracted by the novelty, you miss the underlying point.
Yes, no,
We're
that's
now creating digital assets that people are owning, and there are all kinds of people, iterating on that, in different ways.
The other thing that I think is that we should talk about a little bit is the phenomenon of ICOs. It stands for initial coin offering, which sounds a lot like initial public offering, which was probably a very bad choice of nomenclature on the part of the people who invented that. Paul, explain the phenomenon, and is this just a way around the securities laws, or is there something more important developing here?
So what happened, one thing you should understand about Bitcoin is that it is open source software. It is a program that anybody can take and copy and make their own version of it. And that's what has happened many, many times over. That's Ethereum was basically a guy, Vitalik Buterin, took the ideas and the concepts behind Bitcoin, wrote his own version of it, and created it. And this happened times and times and times and times. And a couple of years ago, people started to realize that you could build a token and attach it to a thing. Not just have Bitcoin sitting out there as its own currency, but if you had a project and you wanted to raise some money, you could sell the token. And maybe the token would have a use on your new platform that you're building. And a couple of people did this, and it worked. Ethereum itself did it. When they wanted to start up, they wanted to fund the project, so they created their own token, sold it. I think they made about $8 million when they did it. Tiny in comparison. Mid last year, for as many reasons as you can come up with, this thing started to take off. You started to see more and more people, projects, creating their own tokens. It became very easy. Actually, the code, the lines of code you needed to do this on Ethereum's blockchain itself became standardized. And suddenly you had dozens and dozens of these new ICOs. Projects that didn't exist a year ago, 6 months ago, 2 weeks ago, didn't exist now, hadn't launched yet, were coming up and creating these tokens and selling them. And because Bitcoin was rising so much, Ethereum was rising so much, you had a hot market, and here comes these new assets, and the whole thing was a forest fire, and it took off. And by the end of last year, ICOs alone had raised $4 billion, which is an almost astounding amount of money when you really think about it, far outweighing what seed stage firms were raising in traditional capital markets. And that's what these all were. Virtually every single one of these was a seed stage project. Companies, not even companies really, just a bunch of dudes who wrote a white paper, didn't have a project, didn't have a product launched. But the thing became a real investing frenzy, and it really kind of helped feed that Bitcoin Ethereum rally in the second half of the year. That's where we stand right now.
Can ICOs list on bitFlyer?
No. Not at this moment. Actually, I'm receiving an email every single day, at least actually 5. About
I was going to say, you get more than one.
Yeah.
I get more than one. You get more than one.
So I'm rejecting any ICOs at this moment because the rules in the ICOs is very vague in Japan and any actually legislation. So I want to actually make it very clear. If there's actually certain rules and they're following the laws, then that's fine. But at this moment, it's kind of vague. What is token? Is it securities or virtual currencies or what? Everyone think you just call it, okay, my token is very safe, and then this is decentralized, and then this is not illegal, so you should list it. Always special message for you. Mine is not scam.
Yeah, right, exactly.
So.
And sadly, a lot of them are scams.
Yeah, would you say more than 50%?
I don't know. I would say this. I think most of them are not going to go anywhere. Just honestly, there are a lot of projects, and that's not, I would think most of them are not going to go, whether or not they're scams or not. It's very hard to, and you've done it, congratulations to you, but it's very hard to build a company and build a product and build a platform that people want to use. So whether or not they're scams or not, I think they are extremely speculative investments for people. Now, a lot of the guys...
More so than Bitcoin.
What?
More so than Bitcoin.
Just as much as Bitcoin.
Yeah.
I think Bitcoin's a speculative investment as well. So yeah, they're highly speculative. You touched on the fact that there's no rules around them. That's a big deal too.
Well, that's about to change very soon, I would think.
Changing every day, every hour.
Yeah.
You have a situation in this country. The SEC is trying to lay down the law and try to put rules around these things. There was a big one that they shut down today, and they are piecemeal trying to get their arms around this thing. And eventually, I think it will happen where you will have regulations around them, and you will have some investor protections put in. But right now, you don't have those at all. I mean,
maybe let me explain a little bit as a lawyer why it is a bit complicated. And you asked what is a token, and I like to hold up a blank piece of paper and ask you, what is this? Well, it's whatever you write on it, right? If you write, I promise to pay you, it's a debt. If I write, this is a share in my company, it's an equity security. If I write, you can use my software, it's a license. It's whatever you write on it. A token, likewise, has no meaning. It's an empty vessel. So when we ask what are tokens, tokens are whatever you put into them. If Microsoft, for example, wanted to do the latest edition of Office 360, its online consumer suite, and say the way you buy that, you don't go to Best Buy and get a box with a little number, you buy a token. And when you stake the token, you can use their online suite, and you can, when you're done with it, you sell it to someone else, do whatever you want. There's a little exchange for Microsoft online tokens. Well, how much do you want to pay for it? Hey, that was a really good addition. Now there's no more of them. I'd like to get one. I'll pay you a little more than you paid. Is that token a security? I would say absolutely it is not. It's a license to use software. It's a very complex question. And the reason regulators are moving slowly is they recognize this, that you can't make a single rule and say, oh, all tokens are this, because they're simply not. So it's very complex.
The way I like to think about it, so I grew up in New York in the 80s, and before we had the MetroCard, we had subway tokens. They were literal coins that you would buy, that you would have to put in the machine before you got on the train. And people would buy like a week's worth at a time or whatever. So these ICO tokens, it's kind of like that, except you're buying the tokens before the subway system's been built. Now, which probably, and I could see arguments for both sides of this. Maybe that's just like opening up access to capital and making good on the promise of the Jobs Act that Obama signed. But on the other hand, you're creating receivables before you even have a product.
It's very complicated. Courts in the United States have spoken to this, and some of you may have heard of a very famous Supreme Court case called SEC versus W.J. Howey, which involved a Florida-based company that was selling interest in orange groves and claimed it was a real estate deal For various reasons, the Supreme Court determined it wasn't, that they were selling securities, and they created a 4-point test of determining what is a security. That test has actually stood the test of time, and it continues to be relevant to analyzing tokens, but these are very subtle questions. We don't have time to go into detail, but there's no clear
20
answer.
seconds, explain it. No, sorry.
You got 20 seconds for scaling. I get 5 seconds for the how. He says investment of money in a common enterprise with a reasonable expectation of profit, primarily from the efforts of others.
Not bad.
There
not
we
bad.
go. So those 4 factors are what apply, but how you apply them in any given case, of course, is complex, and people hire lawyers to kind of work their way through them.
Well, and it's interesting. I mean, you talked about Microsoft, you talked about the subway system, and you look at those things, and I remember tokens too. I grew up around here, and I mean, if it was 50 cents or whatever the token was, you were never. If it was 35 cents, you were never. And I don't remember what it was. It was 30 years ago. Sorry. If it was 35 cents, you weren't going to pay 70 cents for it. You're going to pay 35 cents because you knew what it was. You knew what the utility value of that token was.
Yeah.
With these ICOs, it is completely different. People are using them completely as speculative assets, and you see, these tokens going up multiples in value and trading on exchanges that are not as responsible as some others on this stage. And they are, right now, they are nothing but speculative assets.
Yeah, I mean, the other...
Many of them. Not all of them.
Most,
if not all.
The other imperfect analogy would be when you buy tickets for a concert and you scalp them. But there's a lot of scalping right now of tickets for a concert.
Scalping, by the way, illegal.
Yes, scalping of tickets for a concert that may or may not ever happen. So I want to, buyer beware. So I want to open it up for questions from the audience. We have 2 mic runners in the room. So just raise your hand and a mic runner will come and bring you the microphone. I do request, please ask a question, do not give a soliloquy, and speak directly into the mic. So first question over here.
Hi, it's on. Hi, my name is Daiki Nakajima. I'm actually a member of Vertcoin. Just a quick question to Kano-san. We spoke a little bit about decentralization in the U.S., obviously from a U.S. use case, but I just wanted to get a little bit more on how you think about decentralization on Japan's market side.
Sure. Well, decentralized is the keyword for sure. I mean, I still believe that there are actually a huge change in the society by adopting a decentralized system. So not rely on the centralized system. It could be actually bottleneck of all the transactions. So for example, if you actually make the decentralized the stock trading, you don't actually have to pay the broker's fee. That's actually called DEX, D-E-X, decentralized exchange. So currently, actually, they are trading in cryptos, but if you actually make the token, that's a symbol of their stocks, then you could actually trade their stocks in the DEX. So I mean, I think it's really actually drastic technology for the next actually 10 years.
If DEX, decentralized exchange, catches on, what does that mean for your business?
Well, I think if a lot of people actually use the DEX, maybe that destroy our businesses because we are kind of actually doing the KYC, and then we are very compliant, and then it's costly. And if the people actually just trading the cryptos on the DEX, you can pass through the traditional virtual currencies exchange. But we're going to be the door to the fiat currencies and the cryptocurrencies because you can't really actually trade the fiat on the DEX. So I don't know. It's maybe we can survive, but it's difficult to tell.
But you've got the enterprise product anyway, so you're hedged.
Yeah.
Next question, sir.
Hi, my name is Peter Burgess, True Value Metrics. Could you talk a little bit about the difference between a money transaction and the use of blockchain technology as a means of financing?
Who wants to take that?
You want me to- you're looking at me. I think, perhaps part of what you're referring to is in the U.S. and in many jurisdictions, we have regulations that apply to money transmitter businesses. So where a business is involved in the transfer of money from one location or one person to another, because that activity can facilitate illegal activities, terrorist activities, et cetera, there are significant regulations around any money transmitter business. There are a wide variety of entities in the U.S., like banks and broker-dealers, who do that all the time, but they're subject to separate regulation. Here in the U.S., we have specific regulations. If you're not otherwise regulated by anyone else, like a bank or a broker-dealer or many other things, you're simply a bodega, for example, on the corner that'll take in money here and send money to another place. For example, in Islamic finance, there's a technique, the name of which is not... No, where money can be sent just by the...
Hawala.
Hawala, thank you very much. And that would be a money transmitter business. All of those things are regulated here in the United States, as well as in many other countries, I suspect in Japan too. In a blockchain, you're not transmitting, generally speaking, transmitting money. You're using, for example, tokens in the example of Ethereum to do something. So an example that Paul was talking about earlier, be functional, is Filecoin, raised a lot of money. The idea was there's a tremendous amount of unused online file storage. This token can get you access to that. It rewards the people who provide the storage, and it's used to pay for that by others. There's no money transmitter business in that. That's just paying for a good or service.
Did that answer the question? Was that? Okay. Do you want...
In the early days, they talked about proof of work
Mm-hmm.
as being sort of the backing for the currency, the token, in the case of Bitcoin, and there are other words. But I'm reminded of the world of conventional finance. When the banking system fell apart, it was possible to create a huge amount of money out of nowhere because the banking system was going to fall apart. I mean, it was measured at multiple trillions of dollars. And one wonders whether or not the blockchain idea can't in some way be mobilized so that it can finance the needs of society in this world of ours and the needs to remediate the environment, which are bigger deals than, frankly, the banking system falling apart 10 years ago. So can we use the blockchain idea as the foundation for a completely new thinking about how finance can operate?
That is a really big question. I'd say the theoretical answer is yes. The realistic answer is I think we're going to need to see. I mean, what happened in 2008 with the banking collapse was the banking sector collapsed, and it was a big part of the economy. And people decided, well, do we want to let these guys go down in flames and deal with that, or do we want to do something to prop them up? And they chose prop them up, for better or for worse. Right now, you have a situation where Bitcoin was invented with this whole idea behind it is, this is sound money. This is something that is backed by, you said it, proof of work. The idea is that we're going to create a set number of coins. They will be distributed over time, and this is it. That's why they like to call it digital gold. But keep in mind, like I said, these are very, very early days. I think a really interesting test case was what happened with Ethereum. 2 summers ago? Was that
Yes.
2 summers ago, the
Yes.
DAO?
The DAO.
So the idea is that you have this blockchain, this immutable ledger that can never be changed, never be altered. That's why it's sound money. Ethereum, a couple of years ago, a bunch of guys got together and they came up with this experiment. They called it the DAO, the Decentralized Autonomous Organization. The idea was to have a smart contract-based company that would have no CEO, no board of directors, no management. They would write the instructions into the code, and this autonomous organization would take off and run. They launched it, raised about $150 million. It went it raised a lot more money than they thought. They thought they were just going to launch it and have this as an experiment, but it kind of went viral. Everyone threw money into it. They had all this money. One person, and we still don't know who the person is, one really smart person looked at the code, realized the loopholes in it, and set up their own little wallet within the DAO to funnel all the money into their own wallet. And before the guys realized it, 50 million of it was gone. A third of it was gone. They had a decision to make. Are we going to have this be the immutable ledger that can never be changed and everyone's $50 million is gone and sorry because somebody was clever enough to figure out the loophole in the code? Or are we going to reverse those transactions and make that money essentially disappear? They chose to reverse the transactions. So there are theoretical things that are supposed to happen, but in the real world, when things look really ugly, sometimes people make decisions that are not theoretical but are real. So I think this technology has great potential theoretically, but when you run up against real considerations like the banking system collapsed, like, oh, we just lost $50 million, human emotion kicks in. So again, very early days, a lot of potential, but there are going to be many, many stories like that before this thing is completely built out, I think.
I agree.
All right. We should take some more questions. This gentleman here.
Hi, Katayama with Potent and Partners. Can you speak about the electricity consumption and whether that will be a bottleneck going forward?
I think it consumes 0.15% of the total electricity consuming in the world by the Bitcoin. So a lot of people actually think it's a waste of electricity.
When people say that to you, how do you respond?
Well, actually, there's one certain answer that if you're actually directly counting the amount of the electricity consumed in the Bitcoin's blockchain, maybe it's 0.15%. But for the banking system, also actually consume the electricity because there's a lot of people working and then maintaining the system. So if you're counting on the banking system, it may actually consume more than the 0.15%. So if it's narrowed down, maybe it looks bad, but if it's a wide economy, I think it's still okay.
Over here.
Hi, my name is George Friedlander. Two parts of one question. Implications of cryptocurrencies for traditional currency relationships and for central bank policy as this stuff explodes in the amount that's out there. What happens to central banks and how they behave and how they respond?
That's a great one, Paul.
Yeah.
Me? I think the idea that central banks are feeling threatened by this technology is completely overblown, if anyone's even talking about that anymore. But central banks are intrigued by this. I think probably at this point, virtually every central bank on the planet has addressed it in one form or fashion. I can see a world where eventually digital money, and look, in some countries it's much further along already, but I think you can see a world where digital money is going to be a very real part of our daily lives, and the central banks are going to be part of that. I think what you are going to see is the central banks experiment and adopt this technology to suit their own uses as they see fit, or if they don't see fit to use it, they'll let it exist on its own. Governments are not going to collapse and central banks are not going to collapse. They're not going to go away. You're just going to see all of this kind of develop, and it's either going to dovetail or it's not. There'll be some friction or there won't. I don't think you're going to have central banks banning Bitcoin and outlawing digital currencies, and it's all going to be driven underground. I think you're going to see a very natural, organic progression of all of this with some bumps along the way.
Yeah, I just was going to just pick up very quickly on the idea of central bank digital currency because it's a fascinating idea. And again, almost every major central bank has stated publicly that they've looked at it closely. But it's important to recall we already have digital dollars in this country. When you think about the Fed, and it's the banks that clear there are no stacks of dollars that are moved around. The only thing the Fed has is a ledger very similar to the Bitcoin ledger. It just happens in a Bank of America, 784 billion. But it's just a ledger. So it really is just a step forward, and I think we will see in due course more and more banks. Why can't Apple, for example, who has probably more cash than almost all other banks, except for a handful, they clear at the Fed too. The Bank of England has looked at something called real-time gross settlement, and it's sort of the idea of allowing more entities to clear at the Fed and effectively have access to digital pound sterling, or in our case, digital dollars. So it's a great question, and there's a lot more to come in that area.
And in that scenario, they're disintermediating banks more than they're disintermediating central banks.
Right, the central bank's still there, but that's right. Profound potential repercussions for commercial banks, yes.
And
Sorry, don't you get a velocity issue around this stuff?
You get a lot of issues. Yeah, I mean, it's a very, we can't answer.
There's a million issues, but it would seem
there,
that one of the concerns of central banks is not control of amount of currency, but control over the amount of velocity.
Yes, I mean, there are complex macroeconomic questions, yes.
Before we take the next question, the Bank of Japan, what's been their disposition towards this?
Well, actually, they are not really worried about the virtual currencies because a lot of actually Japanese people loves cash. Actually, it's different. The crypto is not really used for the fiat currency. The fiat currency has a lot of functions to control the economy and the stabilization of the currency between the Japanese yen or US dollars or whatever. But crypto doesn't have the function to control the money flow. So I think they are different. So crypto could be actually used for the payments. And the Bank of Japan are interested in the ledger technology to keep their the money transaction. So I mean, that's very different. So, yeah.
Over here.
My name is Rudy Bertel, and I have a question for Kano-san. By what metrics do your investors value the company, and what's the biggest risk to your business model?
Actually, shareholders are mainly the mega banks, venture capitals. I got the money from the fund named the Digital Currency Group in New York. The CEO is named Barry Silbert. He has a lot of actually investment into the crypto exchange and also own the crypto itself. The biggest risk is obviously like hacking. So we need to actually make sure our securities to protect the consumers. So you can't really actually say, okay, I'm down for the security today. You have to continue the looking for the new technology to protect our systems.
On this side.
Hey, Mike Pagello with Block Tower Capital. Just a question. What are the implications for a reputable firm, organization like Mitsubishi, to be issuing a stablecoin in yen, and how do you think that impacts central bank thoughts within Japan?
The Mitsubishi announced that they're gonna issue the MUFG coin. It used to actually considered as the part of actually fiat currency. It's considered as a bank's balance, so they can issue the liability backed by the yen asset. That's a function of the bank. So, okay, this is just the bank deposit. I'm not worried too much about the MSG coin, but recently there's another news that the MSG coin could be actually considered virtual currencies, meaning that has the fluctuation to the JPY, and the people can trade the MUFG coin as a cryptocurrencies. That's going to be very useful because you can issue the crypt, and you can move as an intermediate currency to convert JPY, MUFG, and that you can use it to the payments. Again, I mean, although actually it's used for the payments more often, I don't think that should impact to the current financial system issued by the Bank of Japan.
think we have time for at least one more question. Let's try one in the back there.
Hi, Katsuo Takeda. I have a question to Mr. Kano.
I have a lot of questions.
Yes.
Because you are the founder. My question is, I understand that the efficiency and the mutable system in the blockchain, but my personal fear with Bitcoin is speculative fluctuation. Is it possible to make it fixed value with Bitcoin? So that just use the transactional efficiency by using a Bitcoin and eliminate fluctuation of value in the Bitcoin. Is that possible?
Yes, yes, it's technically possible. You need a special license like a money transmitter. For example, if you want to move the JPY and to USD, you actually convert JPY to the Bitcoin, and immediately you flip back to the USD. This is how we actually transport the Japanese yen to USD. So there's actually fluctuation of the Bitcoin you can eliminate. But you need the money transmitter license in both US and Japan to do that.
So in that model, you're just using the Bitcoin as like a freight car.
Yeah.
Interesting. Interesting. I think we have time for one more question. This gentleman over here. Bring this gentleman a microphone.
I think we. Do you want to shout it out?
Yeah, just shout it
That
out.
guy's got a good voice.
My question is, you mentioned scaling. I'm curious your thoughts on the Lightning Network and if that's a viable option. If not, what are your thoughts on Bitcoin Cash as a viable option instead?
Me?
Yeah.
Sure.
Spell the ball here.
Yeah, sure. I like Lightning Network. This is actually called the second layer technology that you transact the transaction out of the Bitcoin's blockchain because this is too slow, as I said. So you use the Lightning Network and then transaction Bitcoin or any cryptos, and then write the footprint to the main chain. So I like it. I'm not very sure about the Bitcoin Cash because there's a lot of actually controversial discussion between the Bitcoin Core and the Cash, but I think this is one of the alternatives because it has a huge block size and you can actually wire it in the main chain.
And this has been a fascinating conversation. I'm afraid it's time to wrap it up. Please join us for a reception on the first floor. Thank you very much for the panelists. I could go on all night.
Yeah.
But
Thank you.
And thank you.